Say you can't afford to put money into a retirement. This morning we tell you about a tax credit that may help you contribute to that 401k or that IRA. Stewart Welch, financial planner, joins us here in the studio to explain the Savers tax credit. It's good to see you.
Good morning,
Thanks
Rick.
so much. You say you were surprised at how many people really don't know anything about this.
I think most people don't know about this.
Right.
And it's a tax credit. Now, tax credit is better than a tax deduction because a tax credit, you actually get a dollar for dollar, money back. And so the way this works is, and it's targeted for people with lower income. And what the government's trying to do is encourage you to save for retirement so that you'll be less dependent upon government
Before we get
programs.
into a few more of those details, because that's the kicker right there. So many people, you look at those surveys, we talked about them here with you many times before, when you look at those polls of how much people have put back for retirement one day, and it's a very, very low number. It's a tiny number out there.
It is a small number.
And in the grand scheme of things, a lot of times folks say, I simply don't have the money to do it. I can't save for the future. I need that money right now. This is a chance to kind of encourage that a little bit more.
It does encourage it. So if let me just give you the parameters. If you're filing a joint return and your adjusted gross income is $56,500 or less, you're available. You have the opportunity to get a part of this credit. So it's how much credit you get depends on what your income is, and so it's going to really focus on that. If you're filing as a single, it's $28,250. So those are kind of the top parameters. The maximum that you can receive if you're single is $1,000, and if you're filing a joint return, is $2,000. But that can make a lot of difference. So you file, and this is what's really important. It qualifies according to, say, a 401k.
Right.
People don't know that. It can be an IRA, it can be a Roth IRA, it can be an SEP plan, Simplified Employee Pension Plan, a simple plan, a 457. So lots and lots of plans qualify for this. So if you can figure out, if you fall under those income brackets, if you can figure out how to get a little money into your retirement plan, you're going to get some help from the federal government.
Yeah, so the take home for everybody that's listening there right now is, there's a big formula out there about how much you can get, but if you're as a couple, if your income is $58,000 or below, 56, sorry about that, $56,500 or below, you fall into this category where you're going to be able to get something in a tax credit if you file for this.
Yeah, and just on a joint return at $32,000, you're eligible for, if your income is $32,000 or less, you're eligible for the maximum amount. So one thing people can do is think about like children or friends or family that might fall into this category and try to encourage them to do that. If you're a grandparent, you might be able to help put money in a Roth or something like that.
Yeah, because they're giving, you can give up to a certain point without having to worry about the tax.
And this is a tax credit. This comes back to you on your tax return as either a refund or it can be applied against taxes owed.
Okay, so it's a tax credit, a Savers tax credit. If you have any more questions about it, it's good to see it. Thanks so much for the info.
Thanks, Rick.
All right. When it comes to cars,